Welcome back guys, it's the Foolish Investor coming back to you with another hopefully not too foolish video. And as always, you guys know, I hope you find something useful, helpful and informative in this video. Today I want to talk about the company which is on screen, the Tattooed Chef. You guys who follow the channel know that this is one of my absolute favorite companies, a company which I'm really bullish on and which makes up a very significant part of my portfolio. Now what I want to talk about specifically today are the upcoming Q4 earnings. We don't have an exact date yet, it's estimated to be around April sometimes, but realistically it could happen anytime between now and the next 2 months. But in this video, I specifically want to talk about what kind of results I expect the company to post when it comes to these earnings, and therefore is the stock a good buy now before the earnings? Do I expect the price to run up before and after the earnings are released? So if you guys are looking forward to this one, if you're interested in this company and want to have a little bit more insight into what I think about the upcoming earnings, then make sure you do stick around. As always, I hope you guys are going to like this one. So guys, the Tattooed Chef is a company that has literally been on an absolute tear during 2020. The company posts some absolutely smashing revenue figures throughout the year and they've really just been doing a brilliant job. However, you wouldn't really guess this from the stock price. I mean, ever since December, it seems like it's been quite stagnant and it's actually dropped around 10% from its high that it reached on the 21st of December. And the past few weeks it's just kind of really been up and down, been really quite stagnant. And now I know this kind of makes a lot of people question the stock because people have become really accustomed to a stock running up quickly. However, for longer term investors, you guys should understand that when a stock is consolidating like this, it's really not necessarily a bad thing. And if anything, it's actually an opportunity for you to build out a position through a longer period of time. But now that we have the Q4 earnings coming up, can we expect the stock price to run up before earnings? And more importantly, can we expect it to run up after earnings? What do we expect them to actually do when they release these earnings? Well, for me personally, I am really bullish about the upcoming earnings for the company, and I'm just going to talk you through in this video a few reasons why. It's going to be quite a brief one, not like so much deep fundamental analysis, but just to give you guys a few pointers as to how you can possibly track what you expect a company to do in its earnings, and why I think the Tattooed Chef is going to blow analysts and Wall Street away when they do release their earning figures this quarter. So what I want to talk about first and point you guys to is basically the Tattooed Chef's website ranking. That's basically what you can see here. This number here shows that they're currently the 68,000th most popular website roughly in the world right now. However, just 90 days ago, they were actually only the 196,000th most popular website, and you can just kind of see this crazy growth between then and now. So this is a huge indicator that this company is getting a lot of traffic to its website. Now it's possible there's some investor hype mixed into there with a lot of investors visiting the website. However, I think it'd be difficult to say that all of this traffic is coming from investors looking at this website. So you can see they've really been on an exponential rise. Now what this suggests to me is that the company is having more people visit its website, which is of course a really good thing for sales and revenue, and also possibly that more people are becoming aware of the brand when they do see it in the aisles on Walmart, in Kroger, in all the grocery stores that this company is in, and then possibly going in to have a look at what this company is about. But what you can see is this line is rising really fast. So this here is an indicator that the company's brand is really growing and a lot more people are interested in the Tattooed Chef. And if we do look a little bit further back, we'll see that in September, they were actually the 324,000th most popular site. So this kind of gives you a bigger time span and just shows you a little bit more that growth trajectory they're on. Like to me, that personally looks like Tesla's stock chart. So let's imagine Tesla here down in March and all the way up here now when we're looking today. And this is what Tattooed Chef's website ranking looks like. It's kind of just having this really exponential growth. Now what I also wanted to do is kind of show you guys a comparison of the Tattooed Chef, which is on this green line, and Beyond Meat, which is on this yellow line. So of course Beyond Meat does have a lot more visitors, but you can see ever since September they've been pretty stagnant, just kind of in a straight line. They've done well, they've just kind of maintained the same level of traffic. During that same time, the Tattooed Chef's traffic has absolutely skyrocketed. You can see here that Beyond Meat's global ranking has actually dropped 690 places, while the Tattooed Chef has risen 131,000 places. And by the time we're looking at this in February, the actual difference between their rank is really not much. When you think Beyond Meat is almost a global name now with 54,798 as their ranking, Tattooed Chef really isn't that far behind now, ranked around the 67,963rd most popular website in the world. And there's literally around a difference of around 13,000 places between these two companies now. And when you consider how big Beyond Meat is and how well it's known, and Tattooed Chef is almost on that level in a very, very short space of time, to me that's a really bullish indicator for the interest in this company. See, Beyond Meat's global reach has risen around 6%, while the Tattooed Chef's is around 270%. Page views for the Tattooed Chef are around 280% up, while for Beyond Meat they're around 4% up. So these are two similar companies in similar spaces, and the Tattooed Chef seems to be doing very, very well statistically in comparison to Beyond Meat. Now when we look at stuff such as the amount of pages users are viewing, Tattooed Chef seeing around a 1% increase, Beyond Meat a 2% decrease, and the bounce rate at Tattooed Chef is getting 4% lower, while at Beyond Meat it's around 8% higher. So all of this is really good. It shows people actually engaging when they're on Tattooed Chef's website. And the time on website for Tattooed Chef is up at around 19%, while at the same time down around 6% for Beyond Meat. Now I'm not trying to criticize Beyond Meat here in any way, shape or form. I'm just showing you that a really, really good global brand such as Beyond Meat, how they're performing and how Tattooed Chef is performing in comparison to that, which I just think kind of shows how quickly this brand is growing recognition. Now, of course, I didn't bring you here to just talk about the website, but it's just an indicator I wanted to give you guys. And it's a really helpful tip actually when you're interested in a company, you're tracking a company and you want to kind of track how they might be growing before earnings. Have a look at stuff like this. Have a look at how their web traffic is doing. Is it increasing? Is it dipping? And it kind of gives you an indicator as to whether they're on track to meet earnings, whether it looks like they might actually be surpassing earnings. For companies such as Etsy, any kind of online companies, this can be a really helpful tool to kind of just help you track that metric. Now, another reason that I'm really bullish for the Tattooed Chef's earnings, another reason why I think they could really surpass estimates, is they recently held an analyst day around a month or two ago. And in the analyst day, what they announced was that in just the last 60 days alone, they actually introduced the Tattooed Chef to all of these national retailers. So you've got 7-Eleven, Kroger, Target, all of these grocers, Tattooed Chef has been introducing its brand into more and more. And in just the last 60 days before the analyst call, they had kind of introduced them into all of these places. So now that they've been introduced into those places when analyst day came along, you can anticipate now that these products are actually gaining traction and sales at these stores ever since that time passed. So that again is another reason why I'm really bullish on where this company might be going. If the sales are doing as well at these stores as they have been doing in the stores they were already in, then it just really suggests that the company could come in with some crazy revenue numbers when they post their Q4 earnings. You can see here that in 2020, they had around 4,272 stores altogether with around 23,000 points of distribution. But we know that they aimed for 2021 to have 10,000 stores, so basically more than doubling the amount of stores they had in 2020, and 65,000 points of distribution. So again, almost tripling the amount of points of distributions that they had in 2020. And they do highlight here that they expect significant growth in 2021 through mass and retail expansion. Now, with all these stores coming on board, and possibly some of them even coming on board towards the end of 2020, towards the end of their Q4 kind of timescale, it's possible again that this could just really suggest that with them really continuously expanding their points of distribution, analysts may really be underestimating the amount of revenue that this company is going to do in Q4 and in the years moving forward, in my opinion. Now, I also think that when they report the earnings, the company could potentially also give us more details about their planned advertising campaign for 2021. So all of the results that the company achieved in 2020 were without them having a dedicated marketing campaign, which is absolutely crazy because the company grew revenues at a just stupid rate, to be honest. They were growing crazy fast, and I just find it mind-blowing that they were doing that without marketing and advertising. So they have already announced on the analyst day that they're going to be launching this $15 million advertising marketing campaign. And again, I think they'll give more details about this when they report the Q4 earnings. But when it came to their own projections for Q4, the company kind of guided that they should finish 2020 on revenues of around 148 million. And now that's basically what analysts have projected for the company. Analysts have kind of just taken that lazy route out and gone with the company's guidance. However, I think that considering the way this company's management team is, considering that they're such a new company onto Wall Street, that they probably sandbagged their numbers, and when they were giving their numbers they were probably being a bit conservative, because obviously they don't want to give high expectations and then come in with a miss and kind of lose that trust that they have with analysts. So I think that the company, when it said it's going to finish 2020 on around $148 million, was probably being too conservative, and I think they're going to come in with a beat. So because of all these factors, when the company does report earnings, I do quite honestly expect the stock price to run up significantly afterwards. Number one, I think it's because the company is undervalued, the stock price is due a run up anyway, and then I think if they do report this smash out revenue figures and smash out earnings at this Q4 earnings date, then that's just going to be a further catalyst to just drive the stock price forward. So in terms of what I think people should be doing if they're interested in this company, I really think people who want to invest in the Tattooed Chef for the long term should consider buying and adding to the company now. I know some people don't like the fact that the stock price has been stagnant for a while, but just think about this: if you're long term bullish on a stock and you want to hold the stock for the next 5 or 10 years, then the longer it stays at a low price, the more opportunity you have to continuously add to it as you get paid, as you get more funds. So really it's an absolutely great thing, but I don't think that this company is going to be near $24 once that earning date has passed. So do come back and check this video after they release earnings. Let's see if I'm right. Of course, it's entirely possible that I'm completely wrong. Maybe they don't beat earnings, maybe they do beat earnings, but nobody cares and the stock price stays the same. But we'll come back and check this video after the earnings have been released. My projections are that the company beats on revenue, and I expect that analysts will be rewriting and re-revising their targets for the company moving forward, and because of that I also expect the stock price to run up after the earnings. I think that the company is undervalued. I mean, I've already showed you guys this DCF, so just to come down here you can see that I've projected the intrinsic value for the Tattooed Chef to actually be around $38, with the stock price not even 24 anymore. The stock price dropped to around $23. I think the company is around 65% undervalued, and I think a company undervalued to that level is quite hard to find on the market today. But obviously all of this DCF is based on my assumptions for the company, so do bear that in mind. Pause the video if you want and have a look and see my assumptions, because obviously you might not agree with them. I have based this on a 25 EBITDA multiple, and I've used a discount rate of 12%. Now I think this discount rate is actually really high, because most people at this moment in time, because of really low interest rates, are actually only using a discount rate of around 6 or 8%. And if you were to do that, you'd get intrinsic value for this company of around $61. But personally, I'm not looking to return 6% a year with my investments. I don't think any of you guys are either. So I'm using a much higher 12% rate, and yet I still get an intrinsic value for this company of $38, meaning it seems to be around 65% undervalued right now according to my projections. So this valuation, bearing in mind what I think about this company moving forward in the future, and coupled with the fact that I think they're about to post a blowout earnings when they do report, I don't think the stock price is going to be at $22 or $23 for much longer. So my recommendation has been for a long time to you guys, I really like this company. I like this stock. I think some of you guys do too. But obviously make your own decisions on your investments. I'm not a financial advisor. Do consult one if you need to. Everything in here is just my opinion. But guys, I hope you did enjoy the video. I hope you found it useful. If you did, you know all I ask of you is to please smash that like button. It helps out the YouTube algorithm, but more importantly, it helps out me and it helps this channel grow. And if you enjoyed this content and you want to see more content like this, then do consider subscribing. Join our Foolish Investing family. We'd really love to have you, and consider sharing the video if you think other people could benefit from this as well. But until next time guys, do take care, and I hope to speak to you all again soon. Bum, 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 bum.